The year's halfway over. That is amazing to me. Happy July. Happy July 4th weekend. 250 years of this amazing country. It's truly the luckiest thing to be born in this country. I've done nothing to earn it or deserve it, but by the grace of the good Lord, we all get to be Americans. And I think that is something we always need to keep in perspective. And God bless America. And I mean it. 250 years. Let's hop into the good stuff for today. So guys, rates, yeah, 6.6. Here's the 10-year treasury, right? So it's not interest rate. So green is good here. And you can see we've had, we got beat up and then we got back to good. So we're really just flat, kind of just a meh kind of last week since we last did this update. Job reports, first Friday every month, came out. And basically what's interesting is it's, labor force participation rate falls to lowest in 50 years. So people are just giving up, and it's kind of a stinker of a report if you trust the report, which I don't usually trust it. Payroll growth was just 57,000, but unemployment stays at 4.2. But at the end of the day, I took a little screenshot over here. Dow rises to the new record high. So it's just okay. Job reports, who cares? No matter what happens, we're just going to keep on roaring. So there you go. This was interesting. I saw this. Pardon me. My goodness. I saw this article this week about Mr. Pulte here, who's kind of running the FHFA. That's the people that run Fannie and Freddie Mac, Fannie Mae and Freddie Mac. They are doing a pilot program, which we've proudly been a part of, where on refinances, you don't need title insurance. That is massive. It's huge. It's not for, there's certain things that got to happen, but we've been, CMG is a proud pilot program person or company, I guess, whatever we are. And it says estimated borrower savings 500 to 1500. That it saves more than that in Texas. That's a big expense. So they're trying to expand that to make it to where people can ultimately refinance for a little less money. I love it. It's great. The problem is rates aren't cooperating. So a lot of times, even with these lower costs, the rates still aren't there for refinances. But when they do, good for us. We're going to crush it. Housing bubble. Or not housing bubble, housing balance essentially is kind of what these graphs show. And I thought it was, I always like graphs. I just think they're fun and they're cute, right? But you guys can see the red, the dark red, and there's a little arrow pointing on each one. Look, compared to the last 6 years, we're not good. We're not bad. We just are. What I think was interesting here is its pending home sales rise, pending sales, meaning more homes are getting bought, 3.7% year over year. And on top of that, the number of listings have also increased 2.4%. So we got more listings, which would imply obviously more pending sales. But the good news is the pending sales are more than the actual new listings. So the newer listings is getting absorbed. And the other part, I don't know why or how. Don't remember reading this part of the article, but monthly payments are down about 132 bucks. It could be to rate, right? Just because we got a little better rates and they've been cooperating. So I suspect that's why. But it's the eighth straight month of declines in terms of the list price. So what that tells me is there may be more. I know this is true here in North Texas. The higher priced homes are sitting a little longer. And so if the lower price homes, the first time, home buyer types, the first time home buyer programs are helping and people are buying homes, and that lower price point, that's another reason why the list price might actually decline. It's just more the lower stuff is coming on the market. So down payments, I thought this was really interesting. I haven't seen this in a long time, so I'm sharing it here. And I think this is probably the best slide of the day. The the blue line shows the percent of the down payment. The red line shows the dollar amounts, but it looks like the average down payment, or the median, I beg your pardon, the median down payment in dollars is about 23,000 bucks, which is about 12.8%. So call it a little over 10 percent of a down payment, and that's actually come down. So I gotta be honest, like I said, hadn't seen this chart in a long time, and I think it's really cool. So if you look back between 2013 to what is that, 2019, pre-COVID, it was about a 10% ish down payment after COVID. And I suspect this is affordability. It's getting the homes, but the down payments jumped up to close to 15%. So 14 plus, right? So it's nice to see they're coming down. That's good. And I think, again, when rates come down, that helps affordability. So maybe somebody doesn't have to put quite as much money down there. So with that said, we're going to have some fun. In relation to that down payment piece, I found this to kind of keep things, the theme running. The down payment divide. It takes people in New York City, based on whatever math they come up with, for the median annual household income of $81,000. That's the median annual household income, 81,000 bucks for New York City. It takes them 65 years to save up for a 30% down payment. That is wild to me. And they, again, you can see the chat. I won't read every one of these, but it is just wild to me. Fort Worth, that was one that was in there. I didn't see Dallas, but the Fort Worth one said it takes an average buyer 4.3 years in Fort Worth. So again, man, God bless North Texas. All right. It does take a few years, but look at all these. I mean, San Francisco, LA, Boston, Anaheim, San Jose, like nobody's surprised. These are expensive places to be, but 25, 30, 35, 57 years to save up for a down payment. That is crazy to me. Anyway, I thought this was neat. So if you want to push pause and check that out, I think that's really cool. And then product of the week, not really a product. Whoops, went too far, Mark. Product isn't really product. It's just the how much should you put down on a down payment. Guys, you can get in for zero. It depends on who you are and what you're doing, but there's VA loans, there's bond programs, there's things like that. But I would say if you're not sure, talk to a mortgage professional. The Mortgage Mark team is here to help. So if you do want to know, I don't recommend putting down 12%. I would do either 10 or 15, but it depends on your program. And then our meme of the week. That time I didn't check my lender reviews. I hope I look better than that when I don't check them. And then the evidence of success. No names were given the shout out, but a recent Google review said we helped them through the process. We are here. We are ready to help you, first time or not. We are going to make sure you're making a confident decision. So thank you for that Google review. And you know what to do, guys. Aside from, be safe with fireworks and, be responsible and all that stuff, but have a phenomenal birthday weekend for Uncle Sam, 250 years. I got my shirt on just for the video. And look, there's a little, mohawk, not a mohawk, but an eagle, a bald eagle with a long hair and a bandana. Pretty cool. Anyway, happy birthday, America. God bless America. Peace.